That kind of says it all, guys, right there. That sign sums up our economy. Who would have thunk? There you go. We're naming stores with 2 letters now. UO coming soon. It's amazing how people that are in windows of stores don't have any faces. Figure that out. They got hats, but they don't have any faces. No noses, no mouths, no hair. None at all. Amazing. Hey guys, DJ Wonder Chrissy coming back at you. And today is Friday the 13th. Get ready. Halloween is coming. Halloween is coming. And I meant below if you see any other weird things when you're out shopping like that. We saw a lot of faceless people. Saw a huge jacket. And we saw, stores hiding among themselves. So today I'm going to talk about the effect of rising interest rates on the mortgage industry. We hear about that all the time in the media, but I'm going to go through some numbers for you that show you why people can't afford to buy a home right now or just can't get approved. Okay, so 18 months ago, 30-year mortgage rates were at 3%. Right now, the 30-year mortgage rate is officially above 8% now. So that's for like a person with like a 700 FICO score or above. So if you go back, and these are payments on a $500,000 loan. We'll use that as our base, although it's a little high. But, the median house in the United States about $439, I believe, last I saw. So at 3%, your payments on a $500,000 loan were $2,100. Not bad, right? That's doable. People can afford that. Now at 8%, those payments are at $3,700. So it's gone up like $1,600, which is almost 100%, right? The first one was $2,100. You got to add $1,600. Now you get your $3,700 mortgage payment. Okay, so that's kind of shocking, right? That's just a little shocking. So now let's talk about, not only do you have to make that payment, you have to have an appropriate income to make that payment, right? Because your income's supposed to be like 33% at a maximum. So at that $2,100 payment, your monthly income should be about $5,900, $58 and some change per month. Okay, that's a good, that's a good income. That's someone that's making, $75,000 or so. But for that $3,700 mortgage payment, you're going to need to have income of $10,200 per month. So that brings the income level up to like almost over $120,000 a year. So that kind of like almost doubles your payment there too. It went from $5,900 to $10,200. So those are some shocking numbers. And the only thing that's changing here is the interest rate. We went from 3% to 8%. So I think now you guys can see that the impact to the normal American looking to buy a house is pretty huge. And as I said before, I've got a couple of people in my circles that are thinking about making their first time home purchase, and I'm sure they're not making $10,000 a month, and the only way to get that down is to have a huge down payment. And I'm not sure I'd want to, if I had a big wad of cash laying around, I'm not sure I'd want to sink it all into a home at this point, because I'm seeing that housing prices are starting to come down at many places around the United States, but I don't think they're anywhere near the bottom of where they're going to be. I know in my neighborhood, I know we did a video about this, houses are selling, but if you're trying to sell something over $400,000, it gets a little tough, because as you see here, people just can't afford the payments. Is one possibility. And the other thing is prices are going to come down. In my area, we're like right here. We hit a peak maybe early this spring in housing prices, and now they're starting to turn, and it's starting to head down slowly. There's a house kitty corner to mine. The gentleman we'll call him Sam, for many reasons. He resembles. I'll show a picture of what he resembles, or we'll have an icon for him here. But anyway, Sam put like $40,000 to $50,000 worth of money into his home to get it ready for sale, and listed it at $440,000. Actually, 444. 3 fours. I guess it was a lucky number, but in a matter of probably 2.5 months, he's just lowered his price to $400,000. So he's taken a 10% discount on it, and still no buyers yet. We're hoping that the price reductions do the trick and allow him to sell his home. But there's an example of housing prices are starting to go down here in suburban Chicago and Illinois. So consult Zillow. Zillow's a good application for data if you're looking to find out what's going on in your local housing market. Then you can also consult a local real estate agent. But so that's what I found about our real estate market. I actually thought we were heading down much earlier, but no, it's just a recent thing. So that's what I know about the real estate. That's what I know about selling homes. And man, look at these numbers, are just crazy, right? You have to have, for a $500,000 loan at 8%, you have to have an income of over $10,000. That is utterly crazy. So the pool of your buyers just gets smaller and smaller when stuff like that happens. And I got a feeling, folks, that we're going to see, you're going to see rates for some people, the lower brackets, probably at 10% before the end of the year. So people with really bad FICO rates are going to be paying at least 10% by the end of the year. As I said in prior videos, look for the Fed rate November 1st to probably go up at least another 0.25%. I think they may pause in December, give everybody a holiday treat, and then we'll head into next year and see how things go. Looks like the big banks are reporting today, and I guess their earnings are up. Although I did see a report that their write-offs are also up in the last month or quarter. So they're not through the roof, but they're still pretty high, as high as they were going into the pandemic. So that's not good news. And you also got to realize that banks can sometimes cook the books just a little bit and hide things a little bit, maybe a month or two before they have to really make the books look like they should. So Hope you enjoyed this video. Like, share, and subscribe. Have a good weekend, guys. DJ Wonder Chrissy, over and out.